What is going on, guys? Welcome to the video. Now in this one, I'm going to be showing you how to trade with the Fibonacci. Now this is the only video you'll need. Everything you need to know will be included and it'll be very short and sweet. The Fibonacci is basically used for trend continuations. So if you have a very overextended push to the upside, 9 times out of 10, you're going to see a retracement downward before it continues the uptrend. Now the Fibonacci allows us to see exactly where it retraces to and gives us a nice entry in order to get in with the trend. Now this can be used for both uptrends and downtrends, and I'm going to show you examples on my computer of each one. Now before I hop onto the charts, I want to make it very clear that you should never place a trade solely off of the Fibonacci. It should only be used for extra confluence. So with that being said, let's hop onto the charts and I'll show you some examples. Alright guys, real quick, I just want to show you how the Fibonacci looks. And I just want to mention that the 0.382 level and the 0.618 level are called your golden zone. These are the levels that are the most respected on the Fibonacci and are probably the strongest levels and the ones that I have the most confidence in. So as far as an example, here we have AUD-CHF on the 4-hour chart. Now this is going to be a downtrend continuation. Now what you want to look for is an overextended push that breaks previous highs or previous lows. So here we have this overextended push right here that broke these previous lows. Okay, so now what do we expect? We expect a retracement to the upside before continuing the downtrend. So let's say this is a live chart and we don't see all of this stuff, all right? Let's put our Fibonacci from the high to the low of this move. And what do we see here? Price retraced right to the golden zone, the 0.382. And then continued its downtrend. So this is a very powerful tool. Now you want to use it in confluence with other things, right? So we have this nice support being formed, as you can see here, and price broke through and came back to test this same support as resistance. So we have that paired with the Fibonacci at the 0.382 golden zone, which is a nice opportunity for a short right here, and you can place your stop loss right above the zone like that, and then you can just target whatever. Now you can even use it here too. So we see another overextended push that broke this previous low and it's starting to retrace. So what do? We put our fib from the high to the low and bam, price came back up to test the 0.786 zone before continuing the downtrend, and it's also in confluence with this support turn resistance right here. So again, you can place a short position right here, put your stop loss right above the fib level and target this previous low right here. This would be a valid trade. Again, the fib is in confluence with this support turn resistance, and it just gives you more confidence for your entry in that trend continuation. Let's go on another chart. We have AUD-JPY here, but basically we have this push to the upside that broke all of these previous highs. Now what do we expect? We expect a retracement, but where is it going to retrace to? Let's put the fib. Now you only put the fib when it starts to retrace, okay? So from the low to the high of the push right here, and it came down. I would like it to respect this 0.618 because it would be in confluence with this support turn resistance here. However, it broke through, which is fine, and started to respect this 7.86 zone, which is also in confluence with the next level of support turn resistance. So this is a valid setup right here. You can place a long position right around here and put your stop loss right under the level and the support. And also, it doesn't have to react to the level. It could have definitely shot past here. So you have to wait for support to be formed before you enter. So if you don't see support, don't take the trade. Okay, you want to react to the market, not predict it. I have another example on USD CAD. As you can see, we have this very overextended downward push, and it broke the previous lows right here. Once you see price start to retrace upward, okay, I'll put my Fibonacci down from the high to the low, and look at that. Price came right up to the 0.5, in between the 0.5 and the 0.618, which is the golden zone, and then went ahead and created resistance here, and then finished the trend to the downside. Again, you would wait for support to form and then place an entry right here and put your stop right around here, right above the highest point, and then you target the previous lows. So that's it, guys. It's pretty simple. Again, this is a live chart right here. So this is a trade I probably would have taken if I didn't miss the entry. I mean, we have this very nice support turn resistance, and it's in confluence with one of the zones of the Fibonacci, and it's perfect. You can just place a short right here, put your stop loss right there, and then target the previous low. All right, guys, that's going to conclude the video. Please leave a comment if you have any questions or if something wasn't clear. I will respond to each and every one of you. Like the video if this was a clear explanation and you learned something new, and subscribe if you want to see more videos in the future. I'm going to be pumping out a lot of free information on how to trade properly in the forex market. Now again, this should only be used for extra confluence. Don't place your trades solely based off of the Fibonacci. If you understand that and you use the Fib correctly, like how I showed you in this video, I'm telling you guys, it is a powerful tool, and it's just going to add another level of confidence to your trades, just because it's just one more confluence added on to the confluences that you already have. So that's going to be the end of the video, and I'll see you guys in the next one.